Are you looking for explosive growth potential in your investment portfolio? What if I told you that there is a company that's projected to grow earnings by 20% annually? Now look, in this video we're going to look and dive into Blue Owl Capital. Now this is a rising star in asset management that is outpacing market expectations. We're going to explore their impressive growth rates, look at the dividend strategy and compare them to industry giants. Now is this the hidden gem that your portfolio needs? Stay tuned to find out if this is going to be your ticket to when looking for some robust growth in earnings and growth in future prices. Asset management can be quite attractive, and if we look here, for example, this is Blue Owl Capital. Now Blue Owl Capital runs some of my favourite business development companies, the BDCs, and if we look down here, analysts are estimating EPS increases of 20% basically each year. And this is going off the back of even 23% increase in the 2023 financial year, 22% increase in EPS here in 2024, and so forth. Now, this is a fast rate of growth, and one of the questions that you might have, and certainly I have, is what do we pay for this growth? So if we look at the price to earnings that it's currently exhibiting a 21 times price to earnings ratio. Now, is that reasonable? Maybe. A couple of things to note here. Number one, it's a relatively small company and it has a BBB S&P credit rating, and it has a relatively high level of debt to capital. Now, it doesn't have a huge history here, and so the analyst scorecard is, shall we say, suspect at best, because there's simply not a lot of history compared to some other companies. But let's switch over to the forecasting, and I'm going to take the normal multiple here that it has exhibited. I'm going to switch it to a 21 times, which is basically bang on where it is now. So if it continues on this pathway, we should be able to earn about 25% per annum as a rate of return. Now that comprises both dividend and share price growth, keeping up with the earnings. Now, it's also important to note here that the expectation from analysts is for some very, very strong dividend growth rates that would exceed, in fact, or push us to a very high payout ratio here, for example, in the end of 2025. Now, I think this is unlikely. I think they would moderate or lower the dividends being paid out, so they are not quite stretched or pushed to that level. But if you begin to look at this in terms of the dividends, switching over to the performance tab, we can see that the dividend growth rate in 2023 was in fact a 27% increase in dividends, which is quite substantial indeed. Now obviously there's not a lot of history here, but it has been keeping up with the S&P 500. And that's largely due to the relatively large dividends that it is paying out. It was sort of 3 times higher than the S&P 500. So if it does maintain at this 21 times, we could be looking at 24% per annum, which I think is quite nice as a growth element of the portfolio, while also holding a reasonable dividend yield here with time. Okay, so I've returned to the FinChat platform. Now, Blue Owl or Owl Capital, they have these 3 key metrics here. Taking these off sort of one by one. Real estate assets under management, they have a recent increase in the assets under management here, and we can see this is reaching reasonable levels here and has reasonable growth rates. If we add back on the GP Capital Solutions, we can see that the growth rate has trailed off a little bit in the last year, Now, the GP Capital Solutions is the general partnership. Now, when you're thinking about this, there's been increasing allocations over investments to the different ways of creating value. And it's important to note, particularly here in the 21-22 period as well, many of the larger GPs were gaining a lot of market share, and I think Blue Owl has been benefiting from this trend, and certainly as well some more consolidation and merger and acquisition activity during this period has been supporting Blue Owl Capital's trends as well here. Now, in terms of the real estate, I think there's been some pretty powerful overall secular trends supporting this, particularly when we begin to think about this. They have quite a bit of exposure to industrial and logistics real estate, and some of the onshoring and manufacturing renaissance within the USA has been contributing through to this trend here. They've also continued throughout this period more of their net lease strategy, which has been, I think, quite beneficial in this particular case because it's provided them with some steady income and reduced the downside challenges that they might face. Now, as we add in the third, this is their third tranche here, and by far the greater tranche. Now, this is their direct lending, and I think there's been a very strong long-term trend here because there's been a lot of additional capital in the marketplace as well, and there's been a lot more need to deploy this capital and really grow some of these investments over time. The Blue Owl Capital's also been very successful, I think, when you're looking at their private credit solutions. There's been limits on what can be achieved in the public markets, and so this private credit solution has been quite a powerful growth driver. And as well as this, many wealthy investors are increasingly adopting the private wealth and direct lending opportunities here with Blue Owl, for example, as one mechanism here to drive the growth of their investor portfolios. And I think we've seen this here with the very, very strong growth in Blue Owl Capital's success in this space. Here and by far
just
the
in
greater
terms of
tranche.
sanity check.
Now, this
Here
is
is
their direct
BlackRock,
lending,
also in the asset
and
management
I think
custody
there's been a
banks
very
sector
strong
that does have a
long-term
much
trend
stronger
here
S&P credit rating and a much greater
because
market cap, and
there's
I've got to be
been
honest,
a lot
a
of
better
additional
long-term debt to
capital
capital
in the
ratio.
marketplace as well.
And this isn't cherry
And
picked, but
there's
it
been a
also
lot more
is trading
need
at a
to
21
deploy
times
this capital
blended
and
PE.
really grow.
Now, as we
some
can
of
see
these
here, I think this
investments
gives
over
us
time.
a good perspective
The
on
Blue Owl
what
Capital's
may
also
be
been very
possible
successful, I think, when you're looking at
ultimately
their private
with
credit
Blue
solutions.
Owl
Capital. There's
And
been
a lot of this is due to, if we look down here, the EPS growth per year has been often into the double digits, hovering here at about 15 to 20 times, sometimes lower here in 2019 at 6%
opportunities here with
growth,
Blue Owl, for example,
and
as
forecasted
one
growth here moving forward in
mechanism
25 and 26
to
of
drive
13
the
and
growth of their
15%.
investor portfolios.
Now, at the
And I think
moment,
we've
as I
seen
said,
this
it's
here
trading at
with
21
the
times.
very
This orange line here
strong
represents 15 times PE. Now,
in Blue Owl Capital.
when we think about this as well, we can also look at the dividend growth rate of about 10%, 5%, 20%, 10, 18% dividend growth rate per annum. So that's been very strong and very powerful as well with time. And so I think when we look at BlackRock and what it can achieve as an investment, it gives us some confidence that Blue Owl Capital should be able to achieve something similar. Now, if we assume that BlackRock's going to trade at about a 20 times price to earnings multiple, given the future expected growth here from the analysts, and we know from the analyst scorecard that they tend to be fairly accurate over the short term here, a 1 year forward and 2 year forward as well. So we could be looking at about a 12.5% total annualized rate of return. Now, this is despite the fact that I think it's trading at a slightly higher multiple now. I think if you could have snaffled it at the end of 2023 at about a 16 times price to earnings multiple, I think you'd be a very happy investor at the moment. But I think this is an indicator of the good long-term growth prospects here. Now, the long-term growth usually doesn't get a heavy reporting here. So you can see reporting here only by one analyst expecting just about a 9 to 10% earnings per share growth per year for 5 years on average, and that's very much on average. But if we look at the historical chart as well, we can see that, yes, that looks a reasonable sort of number to expect ultimately long term. And so, again, it would suggest that if you were buying BlackRock, you should do fairly well. And if we bring Blue Owl Capital back, it would suggest again that these growth rates are not too unreasonable. This is a much smaller, scrappier company. Scrappier not being derogatory here, but instead suggesting that it does have these higher growth rates because of the small size and also the opportunity to lock in some fantastic dividends and payments into the future now. So what do you think? Let me know down in the comments below. Now, Blue Owl Capital doesn't have the exposure to Latin and South America that X Investments does have, and I know that some people have left comments about my PAX video suggesting that it's going to have challenges because of that exposure. Blue Owl Capital is playing in the more established sort of North American market. And so I think there's much less risk here of failing to meet these earnings estimates. And so I think this represents some opportunity here for some good long-term growth. Let me know in the comments down below, do you think this is an interesting opportunity here? And is this company on your watch list? And if not, I'd really be keen to know why not.